Hello, fellow Robo Capitalists. Hope you are well. Boy, oh boy, tell you what's not doing too well right now. That's the Middle East. As most of you have heard, Israel attacks Iran last night, targeted approach, took out a lot of their nuclear scientists as well as other high-level ranking officials in their military. And as we speak, Iran is firing back. Now, we're going to go into the details in real time as we have them, going to the CNBC homepage. But then I want to sit back and say, okay, what's happening? Is this likely to escalate? Is this likely to de-escalate? And then what does that mean for markets moving forward? And what are they doing right now? When I talk about markets, I'm talking about oil, United States dollar, interest rates, gold, silver, Bitcoin. Those are the main ones that we're going to go over right now on this video. So let's get right into the latest as to what's happening with this chaos in the Middle East. We've got the screen share going. Let's shoot over to CNBC. Iran launches ballistic missiles. So last night, I don't know how you would not know this, but if you've been busy on a vacation camping somewhere, last night Israel attacks Iran by launching a very specific approach. Now, I don't know if there was casualties. I hope not, but it looks like they were going after key ranking officials in their military and their top nuclear scientists. I just read on Twitter that they've got 12 main guys, I guess, in Iran that work on their nuclear program, and 10 of them were taken out. And so it's you have to ask why. And it seems like what Israel's doing is they know that it's just a tit for tat, back and forth. It's like Doug Casey says, it's the Middle East version of the Hatfield and McCoys. So if Israel does something, then they know they're going to get a counterstrike from Iran. And I'm not taking sides here. You guys can do that. But if you're one or the other, it's probably a pretty good strategy to cut the snake's head off. And so, sure, they can retaliate, but if they don't have any of their main military minds, if they don't have any of their leaders, then it's going to be much harder for them to not just retaliate, but retaliate in a way that's effective. So it seems like that was their strategy, Israel, and it seems like they pulled it off. One of the things that I was wondering on Twitter, because I know nothing about warfare, is how on earth last night they got 10 out of the 12 of their top nuclear scientists, at least according to what I've been hearing in the mainstream media. Who knows if that's correct or not? But assuming that's true, my first question was, how the heck did Israel know where these guys were going to be? I mean, think about that. You take just 12 random people, and you've got to know precisely where they're going to be at precisely what time. And it's not like they did this at noon, so you could just figure, oh, well, the guys at lunch or something like that. They're doing it. I mean, I guess they could have known where these guys live, and they could have assumed that they'd be home in bed, and that's when they had the drone fly in or whatever the heck it was, and take them out. But then even then, how do you know they're not at dinner? How do you know? And if they only got like half the guys, okay, I get it. But they got, so far, they got 10 out of 12. I mean, someone on Twitter said maybe it's their cell phone. Israel has the capability of tracking that, so they just follow the phone, and that makes a lot of sense. But you just have to kind of scratch your head. Another thing that comes to mind is, and this is maybe a stupid question, but maybe you guys have the answer to this in the chat. How long has Iran been working on their nuclear program? Like whether it's energy or bomb or missiles or whatever it is, I mean, who knows? But how long have they been? I mean, as long as I can remember is the punchline. Like even in the 90s, I remember it was all about sanctioning Iran because they had, nuclear this and nuclear that. How long does it take them to do whatever they're trying to do with nuclear? Like, it doesn't take 30 years to build a bomb. Not that I know of. I would assume they can do it a little faster than that. Like or how long does it take to build like a nuclear reactor for energy, something like that? Like 30 years, and you just have to continue, and to where we're just in this we're in this gray area where for the last 30 years we don't know if they're working on a bomb or they're working on energy. Well, you would think after 30 years they would have completed whatever it is they were trying to do, and then we'd know definitively, like one way or the other. Just, I don't know. Seems weird to me. Anyway, let's keep going. So Iran launched missiles at Israel. And this is one thing I heard on a Twitter space last night from people who have a lot more expertise in this than I do. And my expertise comes in with the macro stuff, not the warfare stuff. But they were saying how this was very effective from Israel's standpoint. And likely the counter response from Iran is just going to be a bunch of these ballistic missiles that don't really do anything other than just, well, we have to do something, is probably their approach. But they know that it's really not going to escalate it because it just hits their Iron Dome or whatever it's called. And it seems like that's how this is playing out. Hopefully, the dust settles here. And after Iran launches these ballistic missiles and it hits their dome, you don't have too much in the way of hitting specific targets, and more importantly, civilian casualties. Then this hopefully cooler heads will prevail here, and we'll get some settlement here. But it just doesn't seem like Iran has the ability to escalate. Maybe I'm wrong. Maybe I'm way off here. And but even if I'm off, it seems like this really caught them off guard. Well, it had to have, right? Because if they were expecting something like this, they would have their top nuclear scientists stay in like a different apartment every week or something like that, right? They wouldn't have them go through this daily routine that some sort of spy could figure out, and then make them switch up their cell phones. I mean, that's a no-brainer, right? You got this guy or these 12 guys that are crucial to whatever you're doing. I mean, who knows what it is, but it's important to them, let's say. And you're giving them cell phones that you can just track really easy. Like what do you think Israel's going to do? Like, of course they're going to go after these guys if they have the opportunity. So you think you would take preventative measures to where this wasn't possible. Maybe you could get 2 or 3 of the guys, but you can't get 10 or 12 in the span of 6 hours. So anyway, getting back to this article, Iran launched ballistic missiles. The hard retaliation operation begins. This is according to their news agency, right? But it seems like they just keep. This is what they did like 3 or 4 months ago, or 6 months ago, or whenever it was, and it's just kind of a nothing burger because it just hits their dome, and Iran knows it's going to hit the dome, and that's kind of their way of just kind of backing out. It seems like that. Israeli defense systems are operating to intercept missiles. Okay, and then it's more this kind of propaganda stuff. It's the Zionist regime. Okay, that's exactly what they're going to say, or it's what you'd expect Iran to say. Again, I'm not taking sides here. I'm just trying to report on exactly what's going on and then think through how this is going to play out in the markets over the next, call it, few weeks, few months. Israeli Iron Dome air defense system fires to intercept missiles over Tel Aviv. Yeah, I mean, this is the exact same thing that they did like 6 months ago. That was a nothing burger. I don't know. Maybe Iran got caught off guard and they're just sending these missiles to buy time in order to regroup, determine who they have left, and then how to take a more strategic approach that will do more damage, if you will. I know I read that the Houthis are the Houthis can probably do more than Iran itself. I mean, the Houthi, they can really throw a kink into the program. Trump earlier Friday urged Tehran to reach a nuclear deal before there is nothing left. Okay. And I know Tehran came back and said, no, pound sound. Now we're not even going to talk. But again, what is this nuclear deal? I just don't understand this, because they've literally been talking about a nuclear deal for 30 years. Like when I hear nuclear deal from Trump, it seems like, okay, let's come to the table and you're in the middle of this project. Let's make sure that this project has constraints so it doesn't turn into the ability to start World War III. Okay. And maybe I'm way off, but that's what it seems like whenever I hear let's do a deal, or let's talk about the nuclear part. It seems like that's the direction we're going. But how have they not been able to complete whatever it is they're trying to achieve in 30 years? Like, that makes no sense to me whatsoever. I mean, how 30 years later are we still talking to them about making a deal, implying that they've made a lot of progress, but this project that they started in 1990, they're like 50% of the way through. I just don't get it. Okay, he added that he warned Tehran, the United States makes the best and most lethal military equipment in the world by far, and Israel has a lot to do with it, with much more to come. All right. First airstrikes killed Iran's Revolutionary Guard commander in chief, Hassan Salam. I mean, killed a lot of their guys, at least according to the mainstream media. Maybe that's incorrect, but that's what they're reporting. So now let's go over to markets and see what the reaction is here. As most of you can imagine, oil was up huge. Now it's up 8. It's had a lot of volatility here. Let's go to a chart. So we were cruising along right in the, we were low 60s for a long time. We dipped into the mid 50s. It bumps up to, call it mid upper 60s. And then last night we just explode to a point where it was 76, 77 handle. And then we've come back down and rebounding a little bit to 73, but a huge move as far as percentage terms here. So I think the bond market, the knee-jerk reaction is buy dollars. So risk off, bonds catch a bid. But then everyone kind of sits back like, oh, wait a minute, this might be inflationary. And then they sell bonds, treasuries, and then yields go up. And I don't know what they've done in the last hour or so since I've been at lunch. But I would warn against thinking oil is going to substantially increase inflation or prices over the next 6 months or so. Why is that? Because although oil is an input to almost everything, if you don't have wages going up, you're going to have demand destruction. It's the only thing it's going to do. It's going to destroy aggregate demand. So it goes back to what we say on this channel all the time, where you're robbing Peter to pay Paul if nominal wages aren't going up. So it is true that gas goes up to whatever, $5 a gallon, let's say. But that if your paycheck isn't going up, that means a higher percentage of your paycheck is allocated to gas, and therefore a lower percentage of your paycheck can be allocated to everything else. So you see demand destruction in the majority of the economy, even though oil, which is an input to everything, is skyrocketing. And it's very similar to tariffs, big taxes like that. You can see a price adjustment, but it's tough to really get sustained acceleration of consumer prices because of this phenomenon. And the phenomenon I'm referring to specifically is nominal wages not keeping up with that price increase. Now, this also comes at a time when demand was tanking. You guys know that they OPEC plus were talking about increasing supply. That makes it seem as though supply is normal and they're adding to it. But that's not really the case. Supply was heavily constrained. In fact, going back a year or so, I mean, OPEC had the taps turned off to the point of the GFC. So there is just a little bit of a drip because they wanted to artificially keep prices high or higher than they otherwise would have been. So now they're saying, we got to get back to kind of normal levels of supply. Why? Probably because they're short on dollars. That'd be my guess. And so this is why oil was dipping down into the 50s, along with the demand side looking weak. So not just in the United States economy, but this is where you have to zoom out and look at the global economy. We see what's happening in the UK, where they're having an economic contraction, likely going into a recession. We see what's been happening in China, where they're literally going through a real estate bust, a GFC, similar to what we went through in the United States from 2008 to call it 2010, 11 or so. Eurozone's terrible. In fact, Switzerland is now part of their curve is negative, and their central bank is considering going negative. We thought we'd never, ever, ever see negative interest rates again. Guess again. We're on the front doorstep right now. So my point is global economy really slowing down, and that was being priced into the oil market. And then if the United States joins the potential recession party, or at least the market perceives it that way, then you could have seen oil maybe in the 40s, in the high 40s, assuming that that additional supply would come online. But now everything's changed, at least temporarily, because we have this chaos in the Middle East. So you get a huge bid on oil. But I would be very surprised if oil goes, 80s, 90s, continues to accelerate. To me, this is probably a knee-jerk reaction. And especially if things cool down a little bit between Iran and Israel, you're going to get a big pullback in crude because the demand side will be more of in the forefront of the traders' psychology, and that'll take over, and they'll be like, oh my gosh, war, buy. And then once that starts cooling down, they'll be like, well, wait a minute here. Global demand really slowing down. Sell. So this would, and who knows, because there's so many variables. There's no way I would make a bet on this. I'm just telling you my base case, considering the information that we have at our disposal right now. So let's see how interest rates responded. We've got the 10-year Treasury. And so last night it tanks, and this is what I was saying, talk about the yield, where everyone goes into treasuries because it's safe haven. And then oil shoots up by, I think at one time it was up 11, 12%. And then I think the knee-jerk reaction there is, oh my gosh, this is going to lead to this huge wave of inflation. And therefore, growth inflation expectations increase. It goes up to 4.45. And then I think reality is going to kind of set in with the global economy, and I wouldn't be surprised if this trades down to where it started. Let's just say 4.35 or lower within the next week or so. And ditto that for the 2-year Treasury, which had a similar type of move where we were started below 3.9, 3.88, and we're up to 3.96. Big move intraday. That's for sure. But I would not be surprised if this is trading back at high 3.8s next week, assuming things calm down a little bit in the Middle East. And the emphasis goes back to kind of not geopolitics, but more so macroeconomics. And remember, guys, before this thing broke out with Israel and Iran, or the most recent altercation, the data was getting really soft. So let's go just as a reminder here. We had the CPI come out that month over month was below expectations. We had the PPI come out, especially the core, way below expectations month over month. And we had a bump in initial claims. So when you look at that, also considering what we saw in the non-farm payrolls, more so the household survey, the ADP number, and the decrease in the labor force participation, all of these things are making you lean towards lower inflation and growth expectations, softer economy, probably lower interest rates on that. And then you combine that with what's happening in Europe and Switzerland, where it's highly likely their target inflation rate goes way below their 2% target within the next 6 months or so. All right, let's get back to the dollar. Very important. So we see the dollar kind of with the similar reaction to yields. And what's interesting here is the opposite reaction to what we saw after Liberation Day. Retardation Day is what I call it. And what we saw there is the market really selling off, bonds selling off, and the dollar selling off at the same time, where you would think it was safe haven. Okay, everyone's going into the dollar. But I think we can better define safe haven as not necessarily risk on the economic front, but more so risk on the geopolitical front. And the dollar really caught a bid. Now, I would assume this does the same thing as yields, to where it goes way up because everyone's freaking out that we're getting World War III. You see a de-escalation of that, hopefully, next week. And I think that would be my base case, considering the response or lack thereof from Iran. And be very clear, guys, that's with the caveat that I know very, very little about warfare. I don't know anything about it. So take that with a grain of salt. But assuming that that's what plays out, I would expect the dollar to go back down sub 98 because of those interest rate differentials that we've been talking about on this channel for the last couple of days. Now let's go over to, we'll start with Bitcoin. Bitcoin down almost 2%. Last night it was down a lot more. It was down, I think I saw it trading at 102 or 103. So, I mean, it's no surprise. There's a large component of the Bitcoin price that is speculative. So it doesn't, it's not a shocker if we have increased uncertainty, a lot of geopolitical risk, that Bitcoin sells off along with, NASDAQ, NVIDIA, and whatnot. I'm not saying that the whole Bitcoin price is all FOMO and speculation. It's definitely not. But I think at the margin it is. And that's why you see a big drop in price. So I don't know if I'm going to call it a safe haven asset yet. It doesn't seem like it's trading that way, although it may be in the future. Now, gold, as you would expect, skyrockets, goes up 1.6% today. That is what I would call a safe haven asset for sure. Silver up, not so much. And in fact, most of the day, silver was down, which goes back to what I've been talking about. In fact, I did a webinar about this morning in Rebel Capitalist Pro, where we're kind of asking the question, okay, if you want to play the catch-up trade, meaning catching up with the gold price, is it better to be in silver or better to be in the miners? And the conclusion, well, I won't give you the total conclusion because you got to watch the webinar for that. And you can find that at georgegamma.com/pro. But I was a little hesitant with silver, let's say, because it's got that industrial component, and because if I'm comparing it strictly to gold, and I know the ratio is all out of whack, I get it. But in that webinar, Lynn Alden, I pull up a clip of hers from a recent Rebel Capitalist Pro live stream, and she really, I think, articulates a very well thought out reason why that ratio may stay out. Not that it stays as high as it is now. You're almost at 95 or so, but why it stays above its historic norm. So, and you really saw that huge catch up in silver after the GFC or after the Fed started doing quantitative easing, after the big financial crisis component of the GFC. And so that would, if we're doing apples to apples comparison here, trying to do that, you have to recognize this was after a recession. Now, for most of you on the live stream watching this video, I think your base case would be probably recession or the economy is getting weaker in the United States over the next year relative to where it has been over the past year. And that's not great for silver. I don't know, like pretend the GFC would have gone on until 2012. Would we have seen that huge run in silver at the end of the gold bull market? Maybe, but I think the probability would have been a lot lower. So I think my base case is more uncertainty over the next year and softer economy. And so if we have more uncertainty, that's definitely bullish for gold. If we have softer economy, that could be bearish for silver. So I don't know if I'm on the silver train yet. If things changed, if we somehow went into an economic slowdown, official recession, NBER, and came out the other side, and you still had this 100 gold to silver ratio, then I'd be more enticed, let's say, to pile into silver or swap out some of my gold for silver. Then we saw with oil, okay, we've already discussed that. Let's see if I can go through. I think those are the major topics that I wanted to discuss right now. I think what we have to pay attention to going into next week is what's happening with the price of oil. I think that's going to dictate to a large degree what's happening short term with rates. I would expect dollar to come back down a little bit because I would expect the emphasis to go from the chaos in the Middle East back to kind of the softening of the US economy and therefore the interest rate differential between the ECB and the Federal Reserve. One thing that I mentioned on the webinar today in Rebel Capitalist Pro is I do like the GDXJ, but I don't know if I'd add to my position. But if I wanted to take more risk with gold, I don't know that I would do it with the miner. I definitely would do it with silver. But what I might do is just leverage with gold itself. So maybe you do options on GLD, something like that. I just wanted to kind of throw that out there as food for thought. So if you don't own gold right now, I think you're insane. That's not investment advice. That's just, I think, a statement of fact. I mean, how can you not own gold right now? Jeez, I tell you what. But if you do own gold, one of the things that kind of sucks is you've got storage fees. You're paying 1%, 2%, maybe 50 basis points per year. But with this month's sponsor to the Rebel Capitalist Show, you can actually be paid to store your gold, and you get paid an interest rate in gold. I'm talking about my friends over at Monetary Metals. I'm good buddies with the owner, Keith Weiner, and we've spoken at many conferences together. Super smart guy. We've done a couple interviews, and I think they've got a fantastic service. You have to understand the business model because just at surface level, it seems counterintuitive. It's like, how can someone pay me to store my gold? But what they do are these leasing programs. And why would someone want to lease gold? Well, a jeweler does this to hedge out their risk with, especially right now, you got the price of gold pretty volatile, relatively speaking. And a gold jeweler, a jeweler that has a lot of gold inventory in the form of rings, bracelets, necklaces, they don't want to take that volatility risk. That's not their business. So what they're happy to do is pay a 4 or 5% interest rate paid in gold to be able to hedge out that risk. And that's where the gold leasing program comes in. So if you want more information, guys, check out monetary-metals.com / gammon. And you can call them up, ask any questions. Great customer service. You can also check out the explainer video. Josh will put it in the chat and he'll put it in the description of the video where I kind of walk through their business model. So hopefully it makes a little bit more sense. So if you do think it could potentially be a good fit, but you just want to get the model a little bit better to be comfortable in making that phone call, you can go ahead and check that out. And one thing I did confirm with them the other day, for those of you who want to maybe own a little bit more silver, when you believe this ratio is going to turn, I asked them, because right now I have an account with them and it's been fantastic over the last few months, but all of the precious metal I have with them is gold. It's maybe 40,000, 45,000, something like that. So I texted them and I asked them if I could switch a portion of that to silver, if I was a little bit more bullish on silver. And they said that that's definitely possible. So keep that in mind. Definitely check them out. And on that bombshell, guys, enjoy the rest of your afternoon, your weekend. As always, make sure you're standing up for freedom, liberty, free market capitalism. We'll see you in the next video.